Federal Reserve raised interest rates on Wednesday, despite Trump's disapproval. Will the Fed continue to raise rates into the new year? And President Trump has used the UN platform to rebuke globalism. How will Chinese Foreign Minister Wang Yi confront Trump's approach when he addresses the UN General Assembly?
维护国际和平安全是联合国宪章赋予安理会的首要职责。
Hello and welcome to World Insight with me, Tian Wei. The program is coming to you Monday to Friday on CGTN. We begin with a look at the U.S. Federal Reserve. The Fed on Wednesday raised another short-term interest rate by 0.25 percentage point, and it also intends to steadily tighten monetary policy in the coming months. The quarter-point hike reflects an upbeat assessment of the U.S. economy, while President Donald Trump said he's not happy about the rate hike. Before we get down to business, take a look at this.
It's the third time this year, and the eighth since late 2015, the Fed has raised interest rates. And all signs are that there's another hike on the way. In a statement that marked the end of an era of accommodative monetary policy, Fed policymakers lifted the benchmark overnight lending rate by 0.25 percentage point to a range of 2% to 2.25%.
As the economy has steadily gained strength, the Fed has been gradually returning interest rates closer to levels that are normal in a healthy economy.
The Fed said the U.S. labor market has continued to strengthen and economic activity has been rising at a strong rate. It also said both overall inflation and so-called core inflation for items other than food and energy remain near the central bank's target of 2%. However, President Trump criticized the Fed's decision, again breaking with the tradition of not commenting on the central bank's actions. He replaced Chairman Powell's predecessor for keeping interest rates at record lows to make borrowing cheap.
So we are doing great as a country. Unfortunately, they just raised interest rates a little bit because we are doing so well. I'm not happy about that.
The Fed is now facing political interference. Meanwhile, these days, the U.S. interest rates are the highest they've been since October 2008. The dollar index, which measures the greenback against 6 major peers, surged after the Fed's move. The U.S. Treasury yield curve flattened and stocks rose. And the Fed still foresees another rate hike in December, 3 more next year, and 1 increase in 2020.
For Fed raised interest rates in Beijing, we have Xu Sitao, chief economist from Deloitte China. In Hong Kong, we have Hong Hao, managing director of the head of research from Bocom International. In New York, Max Wolf, professor of economics from New School University. I want to begin by asking you, Professor Wolf, what exactly does this rate raise mean for the U.S. confidence in its prospect of the economy?
So great to be here. Thank you for having me. I think that there's a bit of confusion in some quarters around what's going on in the United States, sort of two things happening at the same time. So one is we're normalizing interest rates that we kept incredibly low for 10 years, having cut them to all-time record lows. So a lot of what's happening is actually a normalization from a dramatic and extreme response to the economic meltdown of 2008 and 2009. And another piece is a gradual tightening in terms of the perception, discussion, and interest rate policy of the Federal Reserve in recognition of a strong economy, and more recently, both a strong economy with upward price pressure because of rising oil prices and also because of America's trade obstruction policies, which are beginning to put some upward price pressure for the whole globe, including the U.S.
Well, Mr. Hong, we did hear from Mr. Powell, who is a Reserve Chairman, talking about the pressure on the prospect of the economy as a result of the trade war. And he has been talking about the concerns, but the question is, how big is the concern vis-a-vis the general, rather optimistic trend of the U.S. economy?
Yeah, I think at the moment we are still not seeing the impact from the trade war showing in the economic data just yet. You're still seeing, for example, durable goods order and unemployment statistics are still very, very strong. So that actually gives the Fed very good reason to raise interest rate. And I think also, most people would agree that by now, we have to recognize a very sort of a substantial tax reduction, a tax cut at the later part of the economic cycle, and that way, I think the U.S. economy is getting an unusual boost at this point in time. So I think the rate hike at this point in time is more than justified.
Mr. Xu, on the other hand, how do you see the two sides of the story, as Professor Wolf just illustrated?
I think for the U.S., the rate hike is very necessary, not just because the strength economy, also about normalizing short-term interest rate in the wake of global financial crisis. For China, clearly, interest rate should be and will be on hold because exchange rate so far has been used as a shock absorber. And in addition to that, there will be still a lot of issues involving deleveraging, corporate debt, so on and so forth. So China is going to do nothing on the rate front.
But my question more is about the United States, of course, at this point. The ripple effect of the rate hikes from the U.S. on the other economies is still a question mark.
Sure.
So back to you, Professor Wolf. What about the question that, in fact, the political leaders in the White House is pretty much against the rate raise because he wants to see the economy continue to boom, and he wants to have a beautiful political record, as the adjective he usually uses. But on the other hand, you have the Fed chairman, actually someone who has been nominated and approved by the president, now pointing a very different direction. How do you see the general debate as a result about the U.S. economy within the administration and inside Washington as well?
Yes, so first thing we need to note is that we have a long, proud, and highly successful tradition in the U.S. of central bank independence.
That's
we haven't
right.
formally revoked that, but the way we sort of rose to our global financial prominence and what kept us there as long as we were there was a pretty widespread belief that our political processes, however messy or off track they may occasionally get, would sort of stay in their own lane and not crash into our economic decision making. So anything that would begin to imperil that for any reason by any president at any time is cause for significant monitoring and some concern. So I think a bit unprecedented there. Hopefully it's a passing whim. And of the many things you cannot accuse President Trump, any kind of sense of decorum or standard normal operating procedure, those haven't been afflictions that he's suffered much, so hopefully it's part of his iconoclastic approach. On the bigger question in terms of the president is clearly trying to signal that the eventual weakening of the economy will not be his fault, but any strengthening the economy may have encountered in the last year or so is very much the result of his policies. That's a very difficult feat to do for any politician, this one included, and so it requires some rhetorical flourish. I think part of what we've seen is his effort to establish that anything good is probably him, anything that might happen that's bad is probably not him.
Now, Mr. Hong, I mean, from an economist from China's perspective, how do you see this dogfight within Washington, D.C. about how to read the general economic picture, whose merits are they, rather, on the other hand, the real growth of the economy and the unpredictability as a result of the trade war and the unpredictability as a result of the midterm election and possibly the further fights between the two parties and the possible instability of the Trump White House if things goes dramatic?
I see. I would say that at this point in time, the strengths in the U.S. economy and also the sort of a delay showing up of the impact from the trade war is giving Mr. Trump a wrong idea of how much further the U.S. economy can go from here. And so I think from a Fed's perspective, they could always err on the wrong side, because it's easier to raise interest rate than to cut interest rate. So I think if they raise interest rate fast enough now, it actually leaves them some cushion for future policy change if things does turn back later on. So I would say that at this point in time, because of the trade war, the unpredictability of the trade war, it actually require extra caution in terms of policy making, both from the White House side and also from the Fed side as well.
Professor Wall, from your perspective, what are some of the most important barometers or areas that you would look at in order to help to understand the potential of the economy as we move along the unpredictability, as all of you have indicated earlier?
Yes, so I would look very closely that we're starting to see a sort of a more mixed macroeconomic picture. So maybe ironically, part of what we've seen is a huge tax cut with an increase in government spending. So a massive $1 trillion budget deficit this year for the US is going to create growth that's a little bit underwhelming, even though it's 4.2%, which is pretty good in the second quarter. And a lot of the reasons we're seeing such good growth actually aren't altogether good in a long-term perspective. So one is a little bit of an uptick in consumer borrowing. Still haven't seen any wage increases really, which is a big issue here in the US because we're now 10 years without substantive wage increases. And we're starting to see more consumer borrowing, which isn't so good. Lots of government borrowing. And those are about half the big growth spurt. And then the other piece looks to be a flurry of international import and export that people were raising to do before the worst of the trade war impacts us. So a lot of these things are kind of short term. They may last another 3 to 6 months, but we're beginning to set ourselves up for some longer term trouble. And that's more what I'd be focused on than the short term good news.
Mr. Hong, one of the things that people have found out about including some of the most important commercial banks, investment banks in the United States, is that they're now looking much more inward when it comes to potential of their business than looking at the international market, given the unpredictability of the Trump White House and its interaction with the rest of the world. So, Mr. Hong, from a long-term and mid-term perspective, as an economist, what would that mean for international investors, including those coming from China and then Asia, looking at the U.S. economy? After all, we're talking about the U.S. economy, it's because it's going to have an impact on our economies as well.
Yes, I think for international investors, it's getting probably increasingly more difficult or more sort of going through a more tedious regulatory approval process to invest in the U.S. I think many things has to be approved and censored, before you can actually make a formal investment in the U.S. now. I think especially for some Chinese companies in the high-tech manufacturing areas. So it is sort of a situation that we have to deal with, when it comes to investing in the U.S. And also, after the midterm election, judging from a historical perspective, it's more likely than not that the Republicans is going to lose one house. So I think it's going to give Trump's policy even more uncertainty, because towards next year, he will find it even more difficult to get some of his orders, some of his laws approved by the houses.
Right. Not only that, probably there will be further investigation about him if that is the case. Well, Mr. Xu, you heard your two colleagues talking about the prospect of the U.S. economy, and as a result, the ripple effects it could have on the Chinese economy, and probably particularly on the Chinese economy, because of the two parties now in this apparent trade war, it's United States and China. So, Mr. Xu, how are Chinese policymakers reading signs coming out of Washington? And given the unpredictability it could have on China's economy, how will China better protect the potential of growth of its own economy with this trade war going on?
Well, I think first of all, judging by rather calibrated reaction from Chinese government, I do think policymakers are going to keep any potential retaliatory measures relatively measured. Secondly, Chinese policymakers are likely to resort to certain counter-cyclical measures for example, tax cut, moderate fiscal stimulus, and also keeping interest rate unchanged. On the latest development, the announcement of reducing tariffs roughly from 9.5% to 7.5%, I think that's a very positive move made by China.
Mr. Hong, you agree?
I think so, but I think we have to keep in mind that in the first half of this year, infrastructure spending has plunged to negative territory in terms of year-on-year growth. I think going forward, we're definitely going to do more infrastructure investment, especially on the western part of China, which tend to be less developed. But then at the same time, the efforts of this infrastructure spending seems to be constrained by the local government debt problem that we have to deal with. So I think there's plus and minuses at this point in time, but I think there are enough policy instruments that the regulators here have in their pockets to deal with the situation.
Professor Wolf, your thought?
Yeah, I think that the Chinese economy is going to begin to adapt toward a future which will be long-term beneficial, in which they move away from some of the long-term structural codependency with parts of the U.S. economy. Those shifts are always require a bit of extra help and handling and care, but it looks like there's a pretty good position capable for the Chinese to make those kind of switches, and those are probably long-term benefits. So I'd see this more as a reduction in some of the vibrancy in the short term from the trade war to be put on a more secure, long-term viable footing. And I think one is usually best served to do sort of long-term house cleaning, even if there's a short-term pain and cost associated with a transition, because in this case, the transition is a bit structural.
I see. Last but not least, Mr. Xu, we see China has been debating about various topics related to this economy and trade prospect. One of it is about state-owned enterprises and also the non-state sector. Today we have heard some well-known quote coming from Chinese President Xi Jinping talking about the path that China should keep on in developing SOE, the confidence in SOE, while at the same time encourage and nurturing the non-public sector. What do you make of the debates going on and some of the important decisions that needs to be made along the way?
Well, I think we need to understand the background of the debate. During the economic deceleration, naturally, private sector would have relatively less access to financing. So it's important for government to provide more assurance to private sector.
All right. Xu Sitao, Hong Hao, and also Max Wolf. What a pleasure, gentlemen, to have you on our program about the prospect of the economies around the world. Thank you so much.